And there we have it. The decision is out, and as broadly expected, the SARB has stood pat on rates. The repo rate is unchanged at 7.5%. The decision, however, not a unanimous one. Still with me to unpack the address and its overall tone, Mpho, Molopyane, Chief Economist at Alexforbes, and Koketso Mano, Senior Economist at FNB. So the SARB leaving rates unchanged as we expected. Koki, what have you made of the governor's tone this time around?
The governor's tone is cautious as anticipated. So they mentioned a lot of risks, and that's the reason why they decided to remain put. Mm-hmm. It seems as though, with the adjustments to the forecast, they're quite strong, especially on the inflation front. So it seems as though really these concerns around what's happening globally have really come to the fore in this meeting. And I guess the question will be if indeed the Reserve Bank is only manages to reach neutral monetary policy by the end of this year. That would mean neutral as per their estimate, I have to mention, 7.25%. That would mean that in our calculations, monetary policy will remain rather restricted if you think about inflation at 3.6%. So it's really quite an interesting dynamic when you think about the remainder of the year and how they might evolve in terms of the expectations.
Yeah, and we'll talk about those projections in just a bit when it comes to rate cuts moving forward. Mpho, it's interesting to see that split. We are seeing 4 members who preferred a pause and 2 members preferred a cut. Just your reading on the divergence.
Yeah, what was quite interesting for me is that was also reflective somewhat of where the market was, right? So we were just talking about it, that the market is somewhat split on today's decision, that some analysts were expecting them to cut, some, the large majority were expecting them to hold, and we certainly did see that play out in this MPC as well. And, for obvious reasons, I think the MPC members that voted for a cut were due to fundamentals. If you look at growth this week, inflation, they revised inflation lower, not only for 2025, but also for 2026, just marginally so, right? So, if they were not in risk management mode, essentially fundamentals would have supported them to cut. So you certainly did see that play out in this MPC. It's really also not surprising that the MPC was also split because, as we were discussing earlier on, that you could really argue either way for today's decision.
And one of one of the important factors here when considering a rate cut is growth, right? The governor reflecting on the numbers we got for the fourth quarter and for the year overall of 2024 with growth at 0.6%. Yes, we escaped a technical recession, but those numbers really not looking good. The SARB itself also downgrading its growth forecast to 1.7%, and risks to growth are still balanced. What have you made of the growth projections in particular, especially when we're in this mode where we are trying to speed up reforms and the global picture also showing signs of weakness? Koki?
The growth picture is quite concerning, I would say. Growth in 2024 disappointed the market. We've seen a scaling down of growth expectations for 2025, 2026. So we've lowered our own expectations for those numbers. And it's really just highlighting, especially when you look at the high frequency data as well, the productive sectors are still struggling in this economy, right? So the low hanging fruits really is on the consumer. And that has already been mentioned around, lower cost of living, two-part retirement withdrawals. So that has been stuff that you could consider to be transitory, right? We go back to that word. What's really going to embed stronger growth, resilience over the forecast period, and the MPC likes to really shift the focus to that, is going to be the structural issues. So as you rightfully said, the reform agenda needs to take shape. And it's not just building resilience within the South African economy, but really making sure that we're able to compete in such a volatile and maybe hostile global environment. If we don't have our cards are decked out correctly in terms of economic structure, that's really going to work against us as we get into this recalibration of supply chains, maybe even not having such a supportive environment when you think about the United States being a trading partner. So it's going to be very important to get those cards correctly decked.
And just your thoughts around growth, Mpho. We heard from the governor just highlighting the kind of effects the AGOA agreement being scrapped could have on the economy. Koki here mentioning that we have to be a bit more competitive when it comes to growth so we can compete on the global landscape. We also just have that budget that was recently tabled where expenditures are higher than revenue. Our debt is not looking great as well. Your thoughts around growth?
Yeah, so I certainly do share the, similar sentiments to Goki that the SA's growth outlook remains quite uninspiring. And we, not hitting that 2% growth rate, which is required to, make a significant difference when it comes to the high unemployment rate in South Africa. And yes, there are improving fundamentals when consider the progress that we are making with regards to reforming key industries like electricity, transport. There's now greater focus on water. This budget, what was quite interesting with this budget, and it departed from previous budget, is that the minister specifically stated that this budget departs from previous budget in a sense that there will not be any expenditure cuts. Yes, a realization that expenditure cuts have not necessarily worked. They have had a negative impact on service delivery. So, maybe let's do something different. Let's try and improve the capacity of the state. Let's try put more money in terms of infrastructure, and maybe we can, get out of this low growth environment. What was quite interesting for me when, talking about that AGOA scenario is that they modeled this AGOA scenario in a severe scenario where there is a negative impact on sentiment, the currency depreciate, inflation is lower, right? But here's the thing. In that scenario, they see the policy rate higher, right? So that already tells you how they're thinking about stagflationary environment. That if growth was to be weak in South Africa, but inflation is higher, the bias would be towards bringing inflation back to target. And in that scenario, certainly they told us that they would be hiking.
And you mentioned how the Minister of Finance took a different approach when it comes to the budget this year when he tabled it, where we are seeing no expenditure cuts coming through and more focus on revenue to fund those structural reforms. And when we talk about, increasing revenue, of course, that hike comes into the picture. And of course, then we are seeing some pressure that comes to households. The governor also mentioning that when it comes to growth, that, it was household spending that initially boosted growth in the fourth quarter. And we do know that some of the factors that were at play there are once-off kind of factors, considering, the two-part withdrawals that have come through there. What have you just made of household spending and the pressure the consumer is under, especially at a time now when we are hitting pause on rates? Koki, I'll give that one to you.
Oh. I wasn't sure if it was Mpho or myself. So yeah, I think that the budget in this context is not an easy sell for a lot of people. And that's why I think the minister's communication really has to come to the fore here and really try and explain exactly what the budget is trying to achieve, because a lot of people are really stuck on we have a VAT hike in this environment where we're just really clawing out of a period of cost of living crisis. Consumers have been completely under strain. And the concern for us, even with consumers really starting to show a little bit of green shoots when you think about spending, is that when we look at our book as FNB, what we see is that people have really shifted towards credit, especially if you think about just before, the interest rates started to come down, consumers really started to go under a lot of pressure. They shifted to credit, and not just any credit. It was unsecured credit. It was credit within the non-banking sector. So it was store cards, those type of quick fixes. And it really showed a consumer under distress. Yes, the two-pot retirement system, which is what we hear so far from research houses such as the BMR, is that it has been somewhat used to repair balance sheets. But you can imagine for a lot of households in the middle to lower income groups remaining strongly under pressure, and a VAT hike on top of all of this is really going to constrain any kind of spending growth that we're currently anticipating. That said, I still think going into 2025 at least, the consumer still is the low-hanging fruit for growth.
And it's interesting to see then, Mpho, that we saw the recent retail sale figures with sales up 7% in January. This was more than expected. But I guess what we don't know is whether consumers are actually using money or whether they are buying things on credit. That just then showing the pressure that consumers are under.
I mean, consumers continue to remain under pressure, as Koki highlighted that some are turning towards store credit, credit in general. When it comes to two-pot, we are seeing it as well, with the new tax year making it possible for savers to tap into the two-pot again. We did see a significant pickup in two-pot withdrawals again. So, that really does tell you that consumers are somewhat under pressure, and they will be looking for any sort of reprieve. And, I also like to go back to another point that we talked about, that if you think about the level of interest rates, and even at 7.25%, if they still do cut again, later this year at 7.25% and inflation at 3.6, interest rates are quite restrictive.
Yeah.
And if we are talking about low-hanging fruits, being the consumer spending, then certainly that's a lever that the central bank can also unleash. But it seems as if though they have taken that responsibility to other, state entities to say that when it comes to growth, it just has to be the structural reforms which lift us out of the low growth environment. But yes, consumer is a low-hanging fruit, and bringing interest rate down could also help the consumer as well.
And it's interesting to see the kind of stance that the governor is taking, especially when we know that interest rate cuts take about 12 to 18 months to actually filter through into the economy. So we haven't even really started seeing, the impact of that in the economy, Mpho.
Yeah, so you make a very good point, and this was also a point which was asked during the Q&A, right? That the SARB seems to be somewhat bias when it comes to its inflation forecast. They tend to be biased on the upside. They tend to project high inflation, and it tends to disappoint. And what that does is it actually leads to an environment where monetary policy is persistently tight.
Yeah.
So, they keep interest rates high instead of providing that support to the consumer. And we then end up having a persistently high interest rate environment. And, that contributes again to the persistent low growth environment and a weak household expenditure. So certainly, yes, the low interest rate environment is only still expected to filter completely through into the economy. But by them keeping interest rate so high, even when their own inflation projections really are showing that inflation will remain within that 4.5% in the outer years, so in 2026 and 2027. So one could argue that with inflation so far ahead, within target, then they should be cutting. There's really no reason for them to, delay. Yes, risks are there, but those risks that they were concerned about in January, they didn't materialize, right? So they could have certainly provided that support to household consumers already.
You know, Gogi, I could be getting ahead of myself, but sometimes I do think that perhaps, you know, the MPC, even though the lowering of the SARB's range hasn't been put through yet, it just seems like they're at that point where they want inflation to be, with that proposal being put through to Treasury, but still not being accepted as yet. Because I don't know, man. It just seems like they want to keep that inflation in such a tight range, whereas, you know, it's at the bottom of the range already.
And Mpho and I are laughing because I'm sure we get a lot of these questions in our different engagements. You and many people suspect this. So it might be something that a lot of people are really kind of thinking about, that the MPC is working with a lower target already, and that's why maybe monetary policy is either being kept tight in order to make sure that inflation is sustained at the current levels, or, you know, they currently working the economy in such a way that you do have that sort of restrictiveness on the economy, keeping a lid on spending, and therefore embedding this lower inflation within the trajectory. The issue that the MPC will always mention when it comes to inflation targeting is transparency is everything, right? Just as much as credibility is everything. So if you don't communicate what your target is, it's really, you're really just working against yourself in order for you to get there. The interest rate is a blunt tool, you know, that ensures that in periods of either shock or stress, or, you know, you have your target, your inflation rather, that is above your target or not within target, that's what you would use to get, you know, monetary policy aligned. But when you are, you know, preemptively implementing monetary policy within the regime of inflation targeting, your communication is so important because it moves inflation expectations. And inflation expectations, even within their quarterly projection model, is what really assists you in getting inflation to a certain level.
Yeah.
So it wouldn't really be helpful to them to keep a secret from economic agents, and economic agents are busy giving the employees 4.5%, you know, increasing the cost on the menu by 4.5%, but you're busy working with the 3.5% and killing the economy in the meantime.
All right, before I let you ladies go, I just want to get your reading on rate cuts moving forward. We spoke about, you know, the QPM model predicting rates at 7.25%. That's still being really restrictive. With that being said, and the kind of commentary we've heard from the SARB and just the global picture as well, Mpho, are you pricing in further cuts, and if so, how many?
Yeah, so we only currently expecting just one further cut, so just one final 25 basis point cut, most likely at the May meeting. So our, you know, most likely at the May meeting, there's really no reason for them to hold out any much longer. If they don't cut at the May meeting, then we most likely have reached the end of the easing cycle.
Oh, I really hope we haven't, hey? Cookie, what about you?
We are slightly more optimistic.
Okay.
So we see two more cuts in the cycle of 25 basis points. The next one potentially in the May meeting, the last one in the November meeting. So we actually have a lower neutral interest rate estimate of 7%, and that's why we see interest rates settling at 7%. And maybe just to close off the other conversation that you had, and I just wanted to add something really quickly there, is that you know, monetary policy only aims in our minds to get to neutral, right? So yes, you've seen interest rate cuts. Yes, you've seen 75 basis points being delivered in this current cycle. But what you really, when you think about the consumer and economic growth going forward, monetary policy is not really stimulating economic activity. It's really just reducing its restrictiveness. So that's something that we need to keep in mind in terms of the expectations that we have when it comes to growth and household spending.
Ladies, thanks so much for joining us and just unpacking today's monetary policy decision for us and the viewers. Thanks to our guests, Mpho Molopyane, Chief Economist at Alexforbes, and Koketso Mano, Senior Economist at FNB. I'll be back on your screens with Business Lunch on Monday at midday. You can catch Zinati on the close at 5:30 p.m. today. But until then, stay tuned for lots more coming up right here on Business Day TV.